New York City is the financial capital of the world. Well, right here in Times Square is home of the Nasdaq, and the Nasdaq is off to a record-setting start of the year. During the first half of the year, over 400 IPOs, over $100 billion raised. I got a chance to speak with Nelson Griggs, the CEO of the Nasdaq Stock Exchange, earlier today, and I spoke with him just minutes after the breaking news of Robinhood filing its paperwork to go public, one of the most highly anticipated IPOs of the year. Let's listen to what Nelson had to say about that.
You led off with a great comment how busy it's been already. Year to date, this is a record year for us with $100 billion raised, and I think you're going to see a continuation of that through the rest of the year, particularly in July. A little break in August and get to very active fall, but obviously a name like Robin will be it's a marquee listing. It'll be a very exciting day here.
When we talk about companies going public, a lot of times there's that key window that they need to get between. Is that window still open, do you think, heading into the second half?
Oh yeah, you have the reception of deals is terrific. I think you have a good solid overall market that's up probably more than people had expected this year. So I think the underpinnings of a lot of great names, a good public market, public comps doing well, and just an overall appetite for the investors to invest in these deals means I think we're going to have a good second half as well.
We talk about some of the trends that have gotten underway over the last, 12, 18 months, direct listing SPACs, to name another one. What do you make of those in this deviation that we've seen from the more traditional route?
Well, we hear a lot about that, and there's still the number of companies going public, actually hitting the public markets, is still prominently through the IPO. You have these other mechanisms to go public, with SPACs being very, very popular starting last year as well as this year. And direct listings is a much smaller part of the marketplace today, only a handful at this point. So I think as you're a sitting company about going public, you just have more options. And that's a great thing. We like all these different options for companies. We spend a lot of time talking to them, educating them like what one makes the most sense for them, as does the banking community. So it's a great time to be a private company about going public.
And speaking of SPAC specifically, Nasdaq has really led the way there. Nasdaq welcomed 67% of all SPAC IPOs, raised just around $60 billion. When you take a look, though, at the performance of SPACs lately, I think that's been the big question, whether or not this would attract riskier deals going forward, just that these blank check companies have to do a little bit more to entice some of these companies to go public that way. What do you think about that?
Well, you did see this incredible amount of capital raised, and the SPAC usually has anywhere from 18 months to 24 months to find a transaction. So this year is a year where most of the companies that have to find a deal by year end have done that. There's about 15 left. Next year is the year we're going to have several hundred. So there's a lot of SPAC sponsors looking for deals, knocking on doors, with the backdrop of the fact that you have some SEC considerations on will they require more transparency, how are they look at forward disclosures. I think you have a very unique time in this marketplace that with more clarity from the SEC, we think the product will be here for the long term, but you're still going to see a little bit of a slowdown and potentially a little bit of shakeout.
And talking about the Nasdaq leading the way, 7 of the 10 largest IPOs by proceeds raised listed on the Nasdaq. You guys attracted Bumble, one of the biggest names here in the tech IPO space over the last year. What do you do to win these big names? How are you guys getting this? I know, from the stock exchange.
I think the kind of companies that are going public are looking at where the market's going, want to be seen as innovative, forward-thinking. Every company is a tech company these days. So that's our brand surrounded with a lot of the services we provide to help them think through their IR strategies or governance strategies. And then as you're here in Times Square, there's so many unique branding opportunities for them to really shout to the world that they're now a public company, which is obviously a very exciting day.
It certainly is, and we saw crowds of people outside today with all the excitement with the IPOs.
New York's back.
Exactly, New York is back. Speaking of that, bringing employees back to the office, can you just talk to us as an executive in a leadership position, just how you've been going about that, and I guess your plans to bring employees back going forward?
Yeah, I think everyone is thinking to start to the premise that you like to keep the things that work well during COVID and try to bring back the things you missed. So a lot of times that leads you to more of a hybrid working environment. It's not for every employee. We do have to have some employees that run the markets that have to be in the office every day. But we're thinking about a greater degree of flexibility for the majority of employees, although we do want them to come back to the office as much as they can. I think that word hybrid you're going to hear a lot more about, but then you have to consider how the client wants to interact with you. So if clients want to see you, you need to be really prepared to go to see them. So we spend a lot of time on it, as do all the companies coming through here. So it is the topic of the day for sure.
So Nelson there talking about his plans to bring employees back to the office. Again, another really strong day for the Nasdaq. Today, Adam, 10 companies listed on the Nasdaq, including Krispy Kreme. That, of course, was a highly anticipated IPO. And then, of course, we got the news on Robinhood, which will also be listed on the Nasdaq. So a record-setting first half start to the year for the company or for the exchange. It looks like the second half is shaping up to be very strong as well.